Well, hello everyone, and welcome to today's webinar, where we'll be talking to Hannah Hodges and Susie Boyle from Sunbelt Rentals. And they're going to be taking you through some of the background to the company, their AP department, and why taking controls is so important to accounts payable and across the business generally. So please do ask any questions that you think of during the course of the webinar. You can add any of those questions into the chat function, which you should find over on the right-hand side of your screen in your GoToWebinar panel. So if you put them in there, we can ask either Hannah or Susie to address them at the end of the webinar. We'll also be hearing from Dan Kimpton from statementmatching.com, and he'll be giving you a bit of background as to how their solution helped Sunbelt Rentals. So with that, I'd like to now hand over to Susie from Sunbelt Rentals.
Welcome to our webinar. Today we'll talk about how we are making it happen at Sunbelt by improving our AP process. My name is Susie, and I'm here with my coworker, Hannah Hodges. I'm an AP lead on the Sunbelt Rentals Accrual team, and I've been with Sunbelt almost 8 years. Sunbelt was founded in 1983 with 2 locations and just 5 employees in Charlotte, North Carolina. In 1990, Sunbelt was bought by British equipment rental company, the Ashted Group. In 2003, 20 years later, Sunbelt had 195 locations and over 3,000 employees. We're ranked number 4 in the rental equipment register. In 2014, Sunbelt entered the Canadian market, had 427 locations, over 7,000 employees, and now ranked number 2 on the rental equipment register. Today, Sunbelt has grown to over 900 locations, 15,000 employees, and has $10 billion of fleet. Over the years, Sunbelt has diversified, which is one of the many reasons we are so strong today. We're not just a rental company anymore, but are branched out to flooring, scaffolding, climate control, and even have an emergency response team. This team has been essential in setting up temporary shelters like mobile field hospitals in the current world pandemic. We're also helping with testing sites and the distribution of aid throughout North America. Safety and training is one of Sunbelt's top priorities, and we pride ourselves on our customer service being available 24/7 for our customers. Sunbelt Support Office is located in Fort Mill, South Carolina, just outside of Charlotte, North Carolina, where Sunbelt began 37 years ago. We call ourselves a support office as our main mission is to support our field so they can make it happen. Every department needed to run a company is located in this building. Well, usually. As of mid-March, we had transferred our Sunbelt team to work from home to help stop the spread of COVID-19. At this time, we're unsure what working in the office in the future will look like. Sunbelt has a very large and diverse accounts payable department that takes their jobs very, very seriously. Except, of course, when we don't. This is a picture of what happens at Sunbelt when you ask for a few days off. That is someone's desk full of balloons. Well, mine. To sustain our growth of our company without expanding our workforce, and specifically our AP department, Sunbelt decided it needed to automate some of our processes. The first automation improvement we decided we need to implement was for our invoices. In 2018, we were receiving over 1,000 emails a day containing invoices that all had to be hand-touched. Often our invoices would get lost in the system without any explanation at all. At this time, we implemented a new workflow and OCR. Our new workflow scrapes our emails and invoice folders to send invoices to the OCR. Many of these invoices are now verified for us, 42% of them passing through to our ERP system without being touched by a human being. The remaining invoices will move through the process, being monitored by our document management team on their way to being verified and processed. The processing team will verify the remaining invoices and push them through to be processed either by them or by our specialty teams. Invoices can be separated by rush requests, corporate billing, as well as different programs we have put in place. Sunbelt also has a separate processing team for travel and utility invoices, as well as asset invoices. If the invoice has missing or incorrect information that hindered the ability to process it, it heads over to our HALT team for further research. A PO process shows itself to be so important here, as invoices with PO issues create quite a backup for our HALT team. At times, we have as many as 15,000 invoices waiting to be researched. We also have a separate team who handles just Canadian transactions. In 2019, Sunbelt had over 25,000 US vendors and 10,000 Canadian vendors. We processed over 1.6 million invoices between the US and Canada last year. The majority of these are PO driven. A portion of our invoices are also B2B, business-to-business digital invoices. This brings us to our final accounts payable team, the accrual team, which Hannah and I are members. Our main job is to work hands-on with the vendors and the stores to maintain the most accurate expense base for Sunbelt, usually researching $15 million of purchase orders. We do this by working with the vendors, talking to stores, and most importantly, reconciling our statements. At this time, I'm going to pass it over to Hannah Hodges.
Hello, my name is Hannah Hodges, and I work with Susie on the accrual team. I've been with Sunbelt since I graduated college in 2018. An additional automation improvement that we put in place is statement matching. In 2018, we were receiving over 10,000 statements in the mail. Each statement had to be sorted manually by a member of our team. This process would take around 2 to 3 hours each week. Additionally, each team member would have around 200 to 300 statements in their statement team email that also had to be manually sorted. In the summer of 2018, we implemented statement matching to allow us to automate our statement reconciliation process. Before getting into why we chose statement matching, I wanted to first talk about why statement reconciliation is important. First and foremost, it helps you to keep your reports as accurate as possible. For us, we use statement reconciliations with the accruals for our branches. These accruals affect their profit and loss statements, which affect their bonuses and ours. Moreover, these accruals also are used in financial forecasting, so it's vital we keep them as accurate and clean as possible. On a less serious note, statement reconciliation is also important because you have fewer angry vendors as you are able to resolve missing invoices and past due balances, ideally before they ask you about them. This in turn minimizes the disruptions in business because you are able to resolve things proactively before an account is put on hold and your store is unable to obtain the products and services that they need to make it happen for their customers. It also allows you to compare records with their receivables to make sure that everything matches up. Also, it helps you to find credits that you might not have known about otherwise. As anyone who works in AP will tell you, people are quick to take your money, but they aren't so quick to give you money. So by reconciling their statements, it makes you aware of any money that is owed. Lastly, it allows you to build relationships with your vendors and your branches if you have profit centers like we do, as you are reconciling their accounts and showing them that they aren't falling through the cracks. However, there are definitely challenges with statement reconciliation. First, it can be time-consuming, especially when you're doing it manually. Second, it can be difficult to discern what things are, especially if you're looking at a PDF or an Excel that isn't notated. Third, it's easy to miss things. For example, invoices that are cleared with an internal credit can be easily overlooked, especially if the vendor has already cleared the invoice on their side. Lastly, vendors don't always know what you are asking for and will sometimes send you the wrong thing, or they will send you something that looks like it was printed on a typewriter from the 1950s. Prior to statement matching, our reconciliations were primarily done in Excel. We would run VLOOKUP formulas against 3 different reports once a month. At the end of the month, the Excel was then converted into a PDF for the audit report. With this, the biggest challenge was to make sure you had the right formula in the right place. VLOOKUPs are one of the more advanced Excel skills, so if you had even the slightest thing wrong, it could mess up your whole reconciliation and you could spend hours fixing it. Because of the magnitude of our other responsibilities, we knew there had to be a better way to do things. So this brings us to statement matching. Statement matching has revolutionized the way we make it happen in accounts payable. We chose statement matching for several reasons. One, there's no contract. It's a rolling 30-day plan. It allows you to automate statement reconciliations and to reconcile multiple statements without expanding your workforce. It's also very easy and quick. It has an incredibly user-friendly interface, so the training to use it is very straightforward and minimal. One of the biggest ways we use statement matching is for our top 50 vendor accounts. These have to be reconciled monthly since we are a publicly traded company. Additionally, we use statement matching to assist us in reconciling some of our messier accounts. For example, one of our vendors has multiple vendor numbers in our system and is unable to be consolidated into one account. We were able to merge those vendor numbers into one linked supplier in statement matching. So when we upload the statement, it pulls from all of the accounts rather than us having to do 10 or so separate reconciliations. Once the reconciliation is generated, we then utilize the error statuses to resolve system issues we might not have caught otherwise. Before getting into the error statuses, I wanted to give a brief overview of how it works. There is an automated daily feed from our ERP system to statement matching. Their system keeps in sync with our AP ledgers. When the ERP system updates, statement matching updates by next day. Statement matching allows you to auto-import your statements. You can send them statements in PDF or Excel, and the statement can be in whatever format the vendor sends you. It does take a bit longer to generate the reconciliation if you're sending in PDFs, and the unit cost is per page rather than per document with PDFs. So there is an incentive to send Excels as much as possible, but if you need to, you still can send PDFs. Once the statements are imported, the reconciliations are auto-generated so that we can jump right into the analysis of the errors. We deal primarily with 5 main error statuses: missing invoices and credits, amount incorrect, invoice number incorrect, date incorrect, and invoice/credit incorrect. The first status we deal with most often is the missing status. This shows us invoices and credits that are on the statement but not processed in our system. With this, there are two possibilities. Either the invoices are being processed and have not shown up in the system yet, or we do not have the invoice. In that case, we would need to request them from the vendor. We are able to request invoices by downloading an Excel report to email directly to the supplier. This report is also a helpful tool to provide payment status for your vendors if they ask you for status of the entire statement. This report includes payment date and payment number, and it comes filtered automatically so that you can filter by missing status when you need to request invoices. Once the invoices are requested, we use the bulk update feature to add notes to invoices requested so we can isolate the invoices we need to follow up on. The second status we deal with most often is amount incorrect. This is going to show you discrepancies between the amount on the statement compared with what you have in the system. Most often, these are for short paid taxes. When that is the case, we utilize the bulk update feature to change the status to short paid tax status. When you change the status to tax in statement matching, it will remove those invoices from the error status page, thus cleaning up the reconciliation. If there are any non-tax discrepancies, we have to research those and notate them either line by line or by using the bulk update feature as well. The next status we deal with is invoice number incorrect. This reveals discrepancies in the invoice number on the statement compared to what we have in our system. Statement matching will match invoices by 4 factors: the number, the date, the amount, and whether it's an invoice or a credit. If 3 of the 4 factors are there, the invoices get matched. Therefore, it is our job to determine if it's a mismatch error or a system error. If it's a mismatch error, we just have to unmatch the invoices and change the status to missing. If it's a system error, we would issue a correction. Once the correction is processed in our system, the invoice number issue will resolve in statement matching. The next status we deal with is date incorrect. These are discrepancies in the date between the statement and what we have in the system. Most often, we manual match these invoices because they are within a few days. However, there is a challenge in determining if the discrepancy is due to a statement miskey or an actual system error. So we do still have to research these. But more often than not, the date is just within a few days and we are able to manual match it to clean up the reconciliation. The last status we work with is the invoice credit incorrect status. This reveals invoices we might have taken as credits and vice versa. This is important because if we paid a credit as an invoice, that's money that we're missing out on. On the other hand, if we took an invoice as a credit, that's money our vendor is missing out on, and they don't necessarily like that. There is a challenge that I've come across with PDF statements and this status. Depending on how the credits are keyed on the statement, they can sometimes convert as invoices. If that is the case, it's an easy fix. You would just edit the line item and change it from an invoice to a credit or vice versa. However, if you see this happening consistently, especially with a certain supplier, you can contact statement matching support and they will resolve it so that you don't have the same issues each month. The last feature we work with in statement matching is the unmatched ERP feature. These are invoices in our system that aren't on the vendor's statement. For us, more often than not, these are related to corrections due to how we format our correction invoice numbers. However, if it isn't obvious that an ERP is for corrections, then we have to research each invoice to determine if it's valid or not. This is an important feature because it allows us to identify invoices that might no longer be due or might have been cleared internally before we pay them. So we are able to fix them without having any misapplied payments or awkward refund check requests down the road. Before I conclude, I wanted to briefly share some quotes from some of our suppliers that have received the Excel reports for payment status to show that it's not just us that like statement matching. Our suppliers love it too. In conclusion, the rental industry is constantly evolving, growing, and changing. Because of this, Sunbelt Rentals has chosen to adapt and automate our processes, especially within accounts payable. Statement matching has allowed us to do more in less time and with less people. This has helped us to reduce administrative burdens for our locations and allowed us fewer vendor inquiries. Overall, statement matching has been a great addition to our automation process, and we hope you'll consider it. You won't be sorry that you did. At this time, I'll turn it back over to Daniel. Thank you for listening to our presentation.
Okay, thanks Hannah, thanks Susie. Hi everybody, my name's Daniel Kimpton from Statement Matching, and what I'm going to do is just give you a bit of an overview of the system. So I've got some slides with some screenshots on, so I'm just going to explain a bit about how it works and then just show you what some of the main screens look like. So the first screen, once you log into Statement Matching, the first screen that you land on is this dashboard. So, accounts payable is, we try and make it a happy place to go. So there's lots of bright colours on there, and then I'll explain what we can see on the dashboard. So what I wanted to talk about was the statuses. Now, when statements come into the system, they get automatically reconciled, and each statement gets a status allocated. So there's like an overall status for the statement, and there's also a status for each line. And then what happens is every time we get new data from customers, which generally happens overnight, all of these statuses get updated. So it keeps reworking the statements for you, which when Hannah was talking about the Excel process, typically, which is what customers move away from, that is good at the time that you've done it, but it's, essentially out of date afterwards. So I'll explain what these statuses are. So starting from the top, so I've got some statements which are fully matched. So that means all of the invoices on the statement are on your ERP system. And it also means you have no open invoices on a vendor's accounts, which are not on the vendor's statement. So what customers tend to do with these is they would send a copy of the report to suppliers to say, I've got all of these invoices. These are the due dates for payments. If there are any invoices that are already paid, there'll be a payment reference on there. So this is really useful information for the supplier, because typically, most of your supplier queries when they email you or telephone you will be, do you have my invoice and when are you going to pay me? So the idea is to share the reports with the suppliers to, reduce the phone calls. The other thing that people use fully matched for is Hannah touched on it on her presentation regarding the P&L. So if you've reconciled a statement and you've got all of the invoices and there are no open invoices on the vendor's account, then if you went into your ERP system for that supplier, if they've got any goods receipts that have not been invoiced and they were posted before the statement, then in theory you could go and clear them down and return that to profit. So fully matched is a good status to have. Now moving down, obviously there are often exceptions. So fully matched with data mismatches. So that means that you have all of the invoices, but there are some errors, some differences between the statement and the ERP system. So you can see below, if you look where it says statement lines, you can see I've got some where the amounts are different, the invoice date, the invoice numbers, invoices and credits the wrong way round, which is obviously a big problem. But I'm going to show you some examples of those anyway. And then moving on, so the third one in the list is unpaid items missing on statement. So that means you have invoices on the ledger that are not paid, but they're not on the supplier's statement. So this is what Hannah was referring to with regards to mispostings, or even potential duplicates. And then at the bottom, this is really generally the priority. So incomplete matching means that you have invoices or credits or both that are on the statement, but they're not on your ERP system. So that's what the statuses mean. Now there's different ways to select your statements. So again, I'm back on the dashboard now. Some of my customers like to look at their statements in a sequence. So I'm very interested in statements where I have missing credits because there's potential money to my organization. So if I run the missing credits report, it gives me a list of statements and it puts the highest value at the credit at the top of the list. And then from here, if I drill into the next screen, this is what the reconciliation looks like. So it's really simple. I have the supplier's statement data on the left, to the left of the status column. And then I have the ERP data, from your ledger on the right-hand side. And I can see in this example, most of the items match, but I've got a credit on the statement that is telling me it's missing. So what we would do here is, Hannah was talking about this earlier. So at Sunbelt, they send a copy of the Excel report to their suppliers to request missing documents. So I'm going to show you what the PDF report looks like, which is, it's the same data, but just presented in a different format. You can actually email the supplier from my system. And I know Hannah and Susie, they put nice polite notes on their emails when they email their suppliers. So you can see that I'm basically sending them a copy of the report. And then, the idea is to obviously get that on a timely basis from the supplier. So I'll show you what the PDF looks like. So this is a screenshot of the PDF. Now this would be Sunbelt's logo if we were looking at a Sunbelt report here, and you can see for the missing credit, I've actually inserted some text automatically. So you can see I'm basically requesting a copy, and then I'm also giving the supplier the status of their invoices. So if you look on the right hand side, I've got some that are in query, I've got some that are posted, there's due dates for payment and so on. Now the status column that can be customized to meet your requirements. So that would look different on Sunbelt's system and also my other customers. But I just wanted to give you an idea about what it looked like. And then if I go back to the system, again, we talked about this earlier, we recommend you add notes in the system. Now you can add notes on the statement line, so you'll see where the icon is blue. I can go in here and I can actually see that I've requested this credit previously. I've just done it for a second time, because the way it works is if you add a note now to say that you've requested the missing credit, let's say next month you get a new statement from the supplier, one that's dated next month. If the credit is still missing, it will actually pull the notes forward from the previous reconciliations. So it is a useful process to actually add notes in the system. Now, I obviously looked at that statement by running a report. This is the other method to select your statement. So this is typical in a shared service center. You'll often have a team of people that are responsible for the reconciliations, and you might divide the work up, you know, perhaps based on company ID, which means, you know, like legal entity, because you might be responsible for certain companies and certain teams. And then you might have a supplier split as well. So I might look after suppliers, you know, A to D, and then Hannah might look after suppliers, you know, E to H or whatever. So you can put a selection in. Now, if you hit search, it's going to give me a list of statements to work on. And you can see, I can see the status of them. I can see the value of the statement. So some customers like to sort them by value and work on the biggest ones, or maybe by statement date. But we're going to look at the one at the bottom of the page here, which is fully matched, but there are data mismatches. So that means there are errors in here. So if you select a statement, it takes you to this page again, and this is quite a big statement, this one. So what you can do is actually use the filter to select the documents that actually have an issue, that are in error. So you can see now I've got a smaller list to work on. And these are quite common, you know, like Hannah said, amount incorrect is a common problem. If you look at the first one in this example, the invoice on the left, which is on the statement, is 105.78, but it's on the ERP system on the ledger on the right hand side with an extra 1. So it's $1,000 higher. So it could have been keyed in incorrectly, for example. The second line on the statement, if you look on the left, it's a credit, and it's actually been matched against an invoice on your ledger, because everything else matches apart from the invoice and credit indicator, which means you've put it on as an invoice, you know, which can happen, because if I'm in accounts payable, it's easy to, you know, we're entering invoices all day and a credit turns up, and sometimes I would miss it because I'm on autopilot. So I would want to go and fix that. And then you can see I've got more where the dates are wrong and the amounts are incorrect. And what you would do as a customer is you would fix these on your ERP system, and then I would get the changes in the files that I get overnight, and then these would all turn green. Or obviously, if you don't fix them on your ERP system, then they'll remain in error, and hopefully you'll get them next time. And then one more example to show you is, this is an example where you have invoices on the ledger that are not on the statement. So we call them unpaid items missing on statement. So if we look at one of these, everything on the statement is matched, which is good. And if you look on the bottom section, unmatched invoices, I've got an invoice on the ledger, which is unpaid for $286.80, but it's not on the supplier's statement. Probably in this case, it looks like it's a regular amount from this supplier, because there's one for the same amount in March and then again another one in April. So it's probably a duplicate in this case, but you would want to go and, you know, reverse it and make sure that the ledger's accurate. So it's just 3 quick examples. I was just going to touch on reporting as well. We've got lots of reporting on statement matching. So on the left-hand side, these are all the reports that are based on statuses. So you can see I've got my missing credits report in there. I can also run reports to show me all the missing invoices, or invoices and credits the wrong way around, because some customers want to manage their statements in a sequence. And then on the right-hand side, I've got some supplier reports. So the one I would point out here is the critical supplier report. So obviously Sunbelt have their top 50, and my other customers have their top, you know, X or whatever it is. And you can actually mark them up as critical in statement matching. And then as a manager, I want to make sure that every month I've had a statement from each of my critical suppliers, and I want to see that one of my AP staff has set their statement to be complete, which means they've worked on it. So it's kind of, you know, managing your kind of critical suppliers. And then we have also got an additional option, which is you can give suppliers access to this system. So you can You can invite suppliers individually or en masse, and they get like basically a supplier portal where they can view their invoices. So you can see it looks similar to statement matching, but I'm a supplier now. They can see their invoices, the statuses, the due dates. They can also look at their payments as well. And if they click a payment, it will show them the invoices that are in the payment. So this is really useful stuff if I'm in credit control on the supplier side. And if you can get them to do it, you know, wouldn't it be good if you could get suppliers to reconcile their own accounts? So you can actually give suppliers access to upload their own statement. So they can go onto this page, and all they do is they basically just upload the Excel, and then they tell the system which column is the invoice date, the invoice number, the amount, and the currency, or they can key the currency in. So when they upload it, again, I'm looking at this as a supplier, but of course, this is exactly what you would see on your side in accounts payable. So I've got lots of problems here. I've got 3 missing invoices. I've got an invoice that you've put on your system as a credit, you know, so I won't be happy about that. And of course, you would see that there are missing documents on here as well. So I just wanted to quickly show you the portal, and then I was going to finish on, you know, what we do for potential customers is you can try this system out yourself, do a proof of concept. You can give me data for 10 suppliers. Anyone in AP will have access to the data that we need. And then give us the statements. We would set the system up, and then we would basically set up a training session where we kind of go through all of the reconciliations that you've given us, so we can explain what's happened, tell you what the different options are, and then we would give you access to it. And you've basically got 4 weeks to kind of use the system to, you know, see what you think of it. And we can have follow-on sessions to, you know, answer any queries and make sure that you get the best out of it. So that's something that we like to do with customers, because it's all about seeing it working with your data to give you the confidence. And then the way the pricing works, it's a rolling monthly agreement, as Hannah said. So there's no minimum term. You can cancel at any time. And there's a monthly subscription, which is fixed, and that's based on your annual invoice volumes. And then we also charge per statement. So you get a unit cost for Excel, and then you get a unit cost for PDF and paper. So I just wanted to give you an idea about how the commercials worked. So thank you for listening. I'm going to hand back to Ellen now, and we can go through any questions. Thank you.
Thanks very much, Dan. Also to Susie and to Hannah as well. A really thorough and insightful webinar too. I'm sure everyone's got some good and useful information from the conversations today. You do have some time to put any questions forward, so while you're thinking about that, just tap any questions that you have into the GoToWebinar panel there. My colleague Helen is on the webinar today, and she'll just be monitoring any of those questions that you've got. So have a think while we just go through the first question, and put anything forward. You know, Hannah and Susie and Dan are here today to answer any questions that you may have that have occurred to you during the course of the webinar. So Helen, do we have any questions at the moment?
Yes, we do. Thank you, Ellen. There's been a question from somebody about how long the solution will take to implement. Probably one for Daniel, I'd say.
Yeah, it kind of varies, because there's something to do on the customer side, because they need to give me the data from their ERP system. So anyone who works for a large organization is, although it's quite simple what we're asking for, some invoice header and some supplier data, they do have to kind of get in the queue with the IT department to sort out, you know, the kind of data requirements. So that the approval process always takes longer, or getting to the front of the queue always takes longer than the actual implementation. But we tend to find that once IT are, you know, kind of on the project, they generally get us data from their ERP system, you know, kind of within 3 to 4 weeks, you know, from their production system. So it's generally about a 4-week lead time on the customer side once they get to that point. And then on our side, you know, it's a cloud-based system, so it's easy to set up new customers. You know, there's nothing for us to install on their site, and we can be up and running, you know, within a week. So we can have all their data in the system, we can have the daily files going in, everything's set up, ready for training within a week of getting the data. And then we tend to have like a 4-week period where we like have a call every week, you know, once customers start putting lots of statements through. And then it kind of becomes business as usual after about 4 weeks.
That sounds great, Dan. Actually, you know, to have that kind of support, particularly in the beginning, and to be able to implement something that quickly as well. And it's really great when somebody's got something new, even if it's a fairly straightforward system. It's great to have somebody on hand to help during those initial few weeks, for sure. Have there been any other questions, Helen?
Ellen, there's just been a question about the recording, and that will be sent out afterwards.
Okay, yeah,
Thank
sure.
you, Ellen.
All right, thanks, Helen. So yes, I mean, if you do have any other questions, then by all means put them forward. I know sometimes you can be hearing a webinar and it only occurs to you afterwards. So do feel free to put any questions forward. You can put them to me, and then I can obviously forward them to Hannah, Susie, or Dan at ellen.leith@p2pnetwork.org. And I can certainly get those questions answered for you. But in the meantime, just remains for me to say thanks very much to Hannah, and thanks very much to Susie for a great presentation today, and also to Daniel Kimpton from statementmatching.com. Thanks everybody, and I hope you've enjoyed today's webinar, and we'll connect with you all again soon. All right, take care everybody. Thanks very much.